You know what's interesting? Just sometimes the loudest signal in property is not a bidding war. It's one bid. And that's exactly what just happened at Holland Plain. Simlian came in as the only developer to bid for this new GLS site in District 10. Just one bidder. No big fight, no dramatic auction-style tension, no 5 or 6 developers throwing numbers around. So naturally, the first reaction is, wait, is this a weak sign for the market? And honestly, that's a fair question. Because in real estate, land bids are not just land bids. They are one of the earliest indicators of where developers think the market is heading. Developers are not buying for today. They are buying for 2, 3, maybe 4 years from now. They're asking, by the time we launch this project, what will buyers be willing to pay? What will interest rates look like? How much supply will be competing nearby? Will demand still be there? So when only one developer bids, we should pay attention. But here's the twist. The bid count was weak. The bid price was not. Simlian's bid came in at $454 million, or about 1491 PSF PPR. That's actually 4.1% higher than the 1432 PSF PPR they paid for the neighboring Holland Link site last year. So this is not a case of a developer coming in with a super lowball offer. This is more nuanced. The market is saying, we like the location, but we're becoming very selective. And that, to me, is the real story. Because Holland Plain is not an ordinary site. This is a new private residential precinct in the Bukit Timah and Holland area. It sits in District 10, near established landed housing enclaves, near schools along the Bukit Timah education belt, and near future green spaces like the community plain and wetland park. The precinct is also planned around low and mid-rise housing, which gives it a very different feel from the typical high-density condo cluster. Now, from a buyer's perspective, that sounds attractive. Prime district, greenery, low-rise character, new precinct, future transformation. But from a developer's perspective, there is also risk. Why? Because this is still an untested precinct. There is no completed new launch right inside Holland Plain that says, okay, buyers here will definitely pay this price. There's no established resale benchmark yet. And when developers don't have clear benchmarks, they become more careful. That's why the sole bid matters. It tells us developers are not blindly chasing land anymore. They are looking at construction costs, financing costs, cooling measures, future supply, competing GLS sites. And they are saying, we'll bid, but only where the risk-adjusted numbers make sense. But Simlian is in a very different position. They already won the adjacent Holland Link site. That changes the whole game, because now, by bidding for the second site, Simlian is not just buying another piece of land. They are potentially controlling the first 2 launches in a brand new precinct. That gives them first mover advantage. It gives them the ability to shape the product. It gives them more control over phasing. And most importantly, it gives them influence over the pricing benchmark for Holland Plain. That is powerful. Think about it like this. If another developer had won the second site, Simlian would have had a direct neighbor competing for buyers. But if Simlian controls both plots, the strategy becomes cleaner. They can decide whether to launch separately, position one project differently from the other, or potentially think about the sites more holistically. According to EdgeProp, analysts even suggested the 2 adjacent plots could be amalgamated into a larger development of around 510 units, with projected launch prices possibly around $3,000 to $3,100 per square foot. And that brings us to the key point. Land bids are leading indicators. When land prices go up, future launch prices usually need to follow. Not always immediately, not always perfectly, but developers have margins to protect. So if the land cost is around 1491 PSF PPR, and you add construction, financing, professional fees, marketing, risk buffer, and profit margin, it's not surprising that analysts are talking about future launch prices above 3,000 PSF. That's why buyers should not only watch new launch prices. By the time the show flat opens, the pricing story has already been written. The first clue was the land bid. Now, does this mean everyone should rush in and buy? No, that's not the message. The message is, read the signal properly. A sole bid tells us developers are cautious. A firm land rate tells us prime location confidence is still alive. And Simlian's repeat bid tells us they see strategic value in owning this pocket early. So my consulted takeaway is this: Holland Plain is not showing a collapsing market. It is showing a more disciplined market. Developers are not bidding aggressively everywhere. They are choosing their battles. And in this case, Simlian seems to be making a calculated bet. Control the early supply, shape the benchmark, and ride the long-term transformation of a new District 10 precinct. For buyers, that means one thing. Don't just ask, how many bids were there? Ask the better question. What price did the winning developer dare to pay? And what does that tell us about where future prices may need to go? Because in property, the market usually whispers before it shouts. And this Holland Plain bid? It's whispering something very clearly. Caution is back, but confidence in prime land has not disappeared. And if you're tracking the Singapore property market, this is exactly the kind of signal you want to watch early, before the launch, before the headlines, and before everyone else starts reacting. I'm PK So. Hope you like my market updates. Stay tuned for more.